Good morning, everyone, and welcome to the European crossover webinar. And wow, we have really seen these equities continue to go in and burst even higher. We closed, came back on the day and even went a little bit further, just post to close, and then dipped a little bit. I think like around 3108 or something. And look how we've turned around and run up again. Just an amazing run. One of the things that did have me a little bit concerned. Fortunately, I was able to scalp out a few bits. I went short right at the post close as futures were still extended. But the one thing that kept me concerned, let me go back in here. As you can see here, even though the HYG, the high yield corporate debt, had pulled back a little bit, look how the XLF, this had been a key daily, the 2502, and we'd actually turned around and closed above that. Now we've even extended those gains, and the same thing in the banking index here. So it's kind of left you like, well, I mean, it's actually gone above the daily, what the daily area was holding here. I'm looking at a 30-minute, but let's put on the daily. You can see here we had jumped above it, so you hadn't seen this market had gone down. You know what I mean? It hadn't turned around and gone lower, although the high yield had not reversed, but at least it had weakened. You see here we closed above these dailies, and that left me I'm really glad to have kept an eye on these or been looking at these all along, thinking, okay, this will tell me, because we certainly saw a sell-off a little bit later in the day as we dipped to what 30.90, I think it was 30.89. We saw the market come back, but it didn't come back like a crazy reversal. It struggled at a little bit around 3108.09, and then we started working a little bit higher and actually put a limit much higher, and ultimately ended up getting filled. And then right after we opened, we did take a dip. I think in early Asia, we dipped back down to like 3108-ish, I think it was. We started coming back up. But it's these guys that actually kept me, maybe I better just wait until NFP day to go and take on any of the positions. And I sure am glad, because certainly we've seen a pretty good bounce back. It certainly looked like the market had reached some key areas. If you look here on the NASDAQ, obviously now we're pushing higher. We haven't, I will say this, we haven't taken out, okay, on this, we haven't taken out this 97.51 yet on the futures. Have not. So interesting here. Gold still remains under some pressure after rebounding back. Crude oil pressing again up here, practically $38. And here with the spruce. And we even made it past this 31.37. I had looked at this in Asia, kind of updated these numbers and said how much further could it push. And I had 31.68, but I didn't mark it off. But comes in right there. See that? A little bit up there, 31.68. So that's where it could go to. Pretty crazy. Hang on, I'm just going to update that. But this has been some kind of run. But you can see here, the high here, the open here for the week, that following week is on a weekly chart, and then the low touch here, 31.68. So potentially that's where it can get to. This is on the daily. That's the 200-day moving average. It's well above that. These other moves have just been on fire. And we did see a hammer bottom yesterday on that dip on the 2-hour chart. Looking at the Dow, pretty crazy. Here's this level here. Let's see here. $26,944. Well, they could take that out. But these moves are something else. I mean, going into NFP and to make that jump up, it's something else. Let's go and take a look at the data. And Italian retail sales came in at minus 10.5%. We did get German industrial orders, came in weaker than expected. Spanish industrial output. I do have some UK data. The mortgage rate, this going to be later. And non-farm payrolls, no one really knows how this number is going to come out. That's why I saw someone noting late yesterday afternoon, they said, even if I knew what the number was going to be or had an inkling what it would be, I'm not even sure how the market's going to react. That's what the individual was saying. You know, to me, it made a lot of sense too. We just don't even know because of how the market wants to react or interpret it. We also have Canadian employment that'll be out. We'll see how bad that is, or if in a weird kind of way, as good as in it's not so bad, so it's good. We'll have to just go and take a look. But obviously, like I said, we've seen one heck of a run here. So just a quick little dip here. As we challenge back here to 31.45, but this thing has been actually want to pull this back and see how this move has kind of played itself out. Yeah, there's a dip down here, so we actually even went lower. I guess we went down to about 31.06. I was already out of the short by then, well before them. And then we came back higher and went to the 31. And I was looking at here and thought to myself, no, because of the BKX and XLF, I said, they haven't even turned around. And better just to leave this thing alone. But to me, I thought, well, there's the 22.5, which I thought maybe this thing could make it up to 22.5. But look, we just spiked up and then took another spike up and take a dip back, spiked up again. These moves are just unbelievable. With that, we'll go and take a look at the news. The euro jumped to a 3-month high on Friday after the European Central Bank expanded its stimulus more than expected to prop an economy dealing with its worst recession since World War II. The ECB's move supported appetite for riskier currencies, lifting the Aussie dollar to a 5-month high and the British pound above peaks hit during the last 2 months. The central bank increased its emergency bond purchase scheme by a bigger than expected 600 billion euros to 1.35 trillion. The euro rose. It's loftiest level in almost 3 months on the week. The single currency has risen 2.4% and is set to clinch a third straight week of gains. Investor confidence in the currency has also grown after Germany's last month threw its weight behind the idea of a European Union recovery fund, breaking away from its long-held tradition to resist moves towards fiscal integration in the currency bloc. Recent actions by both the EU Commission as well as the ECB have reduced tail risks around the euro area economic outlook, said Zach Paddle. Europe's main challenge is going to be incomplete fiscal policy architecture. However, European institutions are making important changes to correct those weaknesses, and those include the ECB's bond purchases as well as the EU recovery proposal. It will go a long way towards improving fiscal policy coordination. Against the yen, the common currency changed hands at 24.43. On the Swissy, it's a 5-month gain at 86.45. Unwinding bets of safe haven currencies reflected bond optimism in financial markets as easing social distancing restrictions support economic recovery hopes. The U.S. weekly claims numbers showed the number of Americans filing for benefits dropped below 2 million last week for the first time since March. Official U.S. employment data later on Friday is expected to show non-farm payrolls fell by 8 million in May after a record of 20.54 in April. The unemployment rate is forecast to rocket to 19.8%, a post-World War record from 14.7% in April. The market is risk on despite historic levels of joblessness, but everyone is still worried that the mood could change and putting stop-loss orders. There's no strong conviction, said Bart Wakabayashi. The Aussie dollar, often seen as a proxy, rose 70 tenths to 69.93. The Hong Kong dollar rose to 7.75 per the dollar. And just a quick touch on the Aussie and Kiwi. The Aussie and Kiwi dollars look set to claim hefty gains on Friday as investors globally rushed to the price in a global economic recovery. The Aussie was at 69.77. The next pair is at 70 cents. The Kiwi at 64.88. Against a rise of almost 4.6% for the week. Both currencies have been carried along a wave of optimism about reopening economies, which has lifted stocks in some key commodities. Such were the gains that traders were wondering whether the RBA might be getting uncomfortable with the currency's strength, given it was making imports less competitive and effectively tightening financial conditions. Daniel Bean, head of FX strategy at ANZ, focused on the valuation of the Aussie than any particular level. The rally has come from a position of currency undervaluation and is aligned to improvements in both risk appetite and global growth prospects. As a result, at this stage, the move is unlikely to warrant attention from the RBA, but if the odd continues to rise despite scant evidence of a robust global recovery, the RBA is likely to be more circumspect. I was shocked when I saw this, woke up and saw this move. This was just incredible. I'm glad I'm not on the other side of it, although technically there's no reason to, but you have to wonder how far this thing has rallied. But that being said, when I looked at the XLF and the BKX, and they both took out prior daily resistance levels to close above them, that really questioned, that this thing could continue to, whether it would pull back and they could actually move higher. Although I thought move higher on the report, not necessarily, ahead of it. So, wow. I'm glad I kept an eye on that. Well, let's go and move into the analysis. So taking a look at the euro. The euro reached weekly resistance levels of 13.56 with the NFP on Friday. No one is aware how the market will react when the data is released. And that's what a point I was making earlier. Resistance will be 1398 with support at 1286 followed by 1252. So we weren't too far away from it. So we made it to 1383, but resistance is 1398. And support is going to be 1286. This thing has really taken off now. This is a key weekly level here. This 1356 is something you got to keep an eye on. I did share a chart on in the chat room. See, look at this weekly. So something to keep an eye on as you come into today. I mean, as we trade today, and whether we're going to be able to stay above 1356. It might end up pulling the market down. We're actually a little bit lower right now, but I think that's going to be key, that 1356. Moving on to the cable. Cable continue to be stifled at the weekly level 2602. Resistance for NFP will be 2655. Well, it looks like we even took that out. Holy smokes, because of all this risk on we saw in the dollar. The high has been 2690. Holy smokes. So I had 2655. I thought there's a possibility we could blow some stops if the dollar sold off after the report. We're doing this even before. We can look if there's anything on a 2-hour chart. We had 2655, got past that. Let's see, right there looks like this comes back. There we go. See right there? That is 2692. 2692. The high isn't quite there, but we'll go with that, which is 2692. Holy smokes. And the support is going to be right there. Seems awfully close way up there, 2547. How about that, 2544? Unbelievable. They're just scaring people, whether it's just foods or you or cable. Let's go on to the Aussie dollar. Well, the Aussie continue to push higher. Resistance will be 69.27, followed by 70.27. You can see that 70.27 we're getting from right there. That'll be resistance. Wow, they're just taking people to the cleaners. This is unbelievable. Just going with the levels there. You see right across here, all these touches, so the volume is 68.98. And going to the Kiwi. Here we saw another strong day on Thursday. Resistance will be 64.94. Holy smokes, even above that. Wow. This is a key major level here, too. You can call it 64.90. It's actually 64.95, 96. We even got past that. And we're still above it, too. You can see this low right here for this bar. That's 65.18. Looks like that's where they kind of tagged it. We'll go with that, 65.18 on that low of that bar. This is, I want to be fading those antipodians. Come into some resistance, start pushing up the Aussie. I didn't make up to 70.27, but that's this is just like a runaway train. I'm not even kidding. So go with this high there, which is going to be 64.43. And moving on to the Canadian. The dollar CAD is stuck in the mud at 35. Downside support will be 34.11. Surprised this hasn't even broken any further. With resistance at 35.83. And let's go move on to the dollar peso. So the dollar peso continues to defend the major support level of 21.54. Resistance will be 22.12, followed by 22.46. So we'll go with that 22.12 when we're pressing back down again. And let's go into the dollar yen. The dollar yen is edging higher with each successive day. Resistance will be 9.33. We just tagged the 9.33. We're actually sitting on it right now. Followed by 9.72 with support at 8.46. So 9.33/72. And support, we're actually going to move it even higher from this area here. So the high on that day, 8.77. Dollar index pressed lower on Thursday. For NFP day support will be 96.42, but we even pressed below that. And we did make it right there to 96.42. followed by 98.01. I mean, followed by 96.01. So 96.42. With resistance at 97.18. And with that, we're going to move into the cross rates. Well, we're still powering ahead on this Kiwi yen. Still clipping along. Look at this. And this is a key level here. 71.05, and we're still potentially can press on up in here. We're going with this high there. 71.45. Go with that high right there, which is 71.34. So 71.34. And support would just be this level right here. If we do break lower here, unbelievable moves, 70.26. Onto the euro yen. This move is unbelievable. Look at that. Absolutely running over people. You can see this body right there. 24.26. And we've actually gone above it, but that'll be resistance, 24.26. And there's going to be support. See that open right there? It's 23.63. And looking here at the euro odd, well, you can see they're trying to hold it right there, which is that key major level of 62.07. 62.07. And resistance is going to be right there, 63.42. And onto the euro kiwi. Well, the kiwi still remains strong, and it's just going to be this level right here, which is 74.09, which we had already. And resistance is going to be right back up here, technically this level here. 75.98. And on to the Aussie yen. This thing has been on fire too. Right there, you can see the wick here and here. $76.92.